Hey, what's up, guys? It's Saturday night. I wanted to get this out a little bit early, share some of my thoughts for next week, and cover a few new swings into September. But I think I might just wait till the end of the month for most of my calls. I want to just focus on puts. First, I want to address something that everybody, including myself, has been experiencing, is fake outs and why they happen. We talked a little bit last week about the market maker pattern that, like I always say, a failed breakout is stronger than a breakout. So, for example, Bitcoin, when it looked like this, everybody saw a head and shoulders, and they were like, oh man, it's done for. It's going all the way down. Gonna start over. And everybody was looking forward to getting it at $12,000 again. But that didn't happen. We saw this huge thing here. And as you can see, we had a kind of a base here that really extends over here, which would have been the neckline if you wanted to call that a head and shoulders. But anyway, so when everything looked like it was about to break down for Bitcoin, out of nowhere, it just ripped, right? And that's what's been happening this entire year. It seems like 2020 was just straight up. That was awesome. 2021 has just been all over the place. Junk. Apple's been junk. Amazon's been choppy. Netflix has just been in a channel. I mean, everything is hard to trade. So swings don't work very well. And we've been stopped out on quite a few. We've been pretty successful. But I don't know. I'm making more money on swings than I am day trades right now. But anyway, just wanted to clarify why it feels like if you're always losing, part of it might be because you're trying to buy a breakout. And right here, it was like everybody thought, oh man, we're just going to fail. And it just ripped, right? I got stopped out on a day trade. I tried to get in a Moderna short at 360 on a couple days ago. Right here, this huge green bar. So I was looking at this, and I'm looking at this, we're in a downward trend, and I'm like, okay, we've got, we've got some bear flags going here, we're breaking down, got another one forming. As soon as we break this, it's just going to drop, right, because we're stupid extended. So I was like, oh man, this is perfect. So pre-market, it gaps down, and I was like, yeah, the sell-off has already begun. So I got in early, and I should have waited for the trigger. And this is what everybody did, because everybody said Moderna is going to crash today on August 17th. So what I should have done is waited for this pre-market low to break and then got in short. But I was just too excited about this huge gap down, and I thought usually when stuff gaps down that much, you at least get part of a sell-off, because everybody woke up, they just bought right here, and now they're pissed, and so they just sell off the open. But that didn't even get a chance to happen. It just ripped 360 to 380, $20 move in like a couple minutes. I mean, it was literally, yeah. I mean, it just bounced hard. right? So anyway, I held it because I thought, oh, well, it's just going to retest here and fail, but it did not. It just kept going, so I got out at a big loss. But anyway, the point of that was I was trying to short Moderna, and the market makers had a different idea. They knew everybody wanted to short this, so what they did was squeezed everybody out. That's the same thing with UPST. Happened on Friday. I was long at 198. I thought it was going to rip to 220 again, and just having a huge squeeze. It ended up squeezing pretty good. I held it too long and got out at like 204. But anyway, we have a double bottom right here, and everybody on this night went in short because they thought, all right, we're breaking down. So they all got in short. But then you wake up the next morning and your stock is up here at 198, and it's kind of almost clearing this pivot too. That means everybody that went in short, everybody that's been short since the top, is about to get squeezed out. And so on this example, I actually used that to my advantage, and I got in calls and made a little bit of money. But anyway, so if you're trying to buy the breakout in this kind of market, you're going to get shaken out. AMD was another example, real quick. On Thursday, I think it was. Wednesday. What day is this? The 18th, whatever day that was. A lot of people were in short because it's in a downtrend, coming down. If you look over to the left, you have this pivot right here. So during the day, as it was just selling off, and it was selling off pretty hard, and it never really got oversold, but it was coming down, and then out of nowhere, boom, just spikes up and squeezed everybody. Well, then it continued to sell off, so it didn't really work. But I said at 104.50 I'm going to buy calls. I was going to buy 110 call. I bought 110 calls, but it didn't go that high. I thought we were going to jump way back up here. But anyway, it did fake a lot of people out, and if you held, you got a pretty good sell-off. And actually, this is on my short list this week. So let's jump into that. But anyway, pay attention to what is on your left. Always look for surprises, and don't be surprised if they happen. I don't know where my chart went. But anyway, oh, here it is. It's so dang high. Anyway, AMD is on my short list for this week. However, I want to wait for a gap up to 106. If you look at the hourly chart here, we are putting in another bear flag, which will probably drop, but we have this flat top right here at 106. And if you notice, this guy, whoever this was that pushed the stock back up, Bank of America or whoever it was, every time it gets to 104.50, they buy it up because they think that's a good deal. So it gets here, they buy it up. It gets here, and they buy it up. Breaks down, they buy it up. It's cheaper than 104, they buy it up. So we're sitting at 104 right now. I assume they're going to try to buy it up, and then at 106 we will short it, and it will just go down to 100. 100 is the target on AMD. So we'll get in at 106 and short it. I'm trying to catch the top on this one. We'll have a pretty tight stop. Again, this will be the same idea. Everybody will be wanting to buy the breakout, and we will be selling the breakout. So right here, up here, we're going to sell it, short it, buy puts, because this is what support is now resistance. It is under the moving averages for the most part. So I assume the sellers are not done. They're not out yet. And when everybody thinks it's going to break out over 106, it's going to fail. AMD short at 106. NVDA, same sector, but different pattern. This one's just what was support is now resistance. So you can see here it bounced once, twice, 3 times, 4 times, but then it failed, and now this is resistance, resistance, resistance. It got back up here and stopped, and so that's resistance. You can do it one of 2 ways. You can, because this is also a triple top, 1, 2, 3. The safe way would be to wait for, where'd my day go? My day gone? I don't know. The safe way would to be buy, this is a 3-bar play that broke out, or that popped. I mean, it's not a 3-bar play, but this pattern, when it breaks this support here, then we will buy puts back down to this trend line. Where is my trend line? Everything's messed up here. So in the long run, NVIDIA can go higher. Got too much stuff going on. See, resistance, resistance, support, support, support. So when we get back to the 50-day moving average, we'll sell around 190. But anyway, so you can do it a couple ways. If we gap up above this triple top and then break it. Sorry, I was not prepared for this. If we gap above this on Monday and then break back below 208, get inputs, and we'll do that. If we also just go gap down, then when we take out this bar here at 201, then we'll get in puts back to 190. 188 will be our target, this area. So a gap up and a break of this, we can get inputs, or just as we come down, we can get inputs. NVIDIA 200 puts. I think if you look at SPY is on my list for short. I got in short on at the bell close on Friday, just as a gamble. But if you look what's been happening here, we come down to the 50 moving average and we bounce, right? We've been doing that since the election. Come to the 50, bounce. Come to the 50, chop around, bounce, bounce. So, at this point, everybody knows when we get to the 50-day, buy calls, right? And it worked. Buy calls, and it goes up. However, I think this is also a fake out, because for one, if you use your little Fibonacci tool, we stopped at 618. Here it is. I like SPX because it's a more continuous pattern. You don't have the gaps like SPY. So if you use SPX, you can see it came down, and I'm using the bodies of the candles here, but pretty much pulled back 60%. And over Friday, you could buy calls back to 100% and get into 448 calls, or what I'm assuming is we're going to get a second pullback to retest this 50, and we'll kind of put in a W pattern like that. So I'm in puts, and I'm in puts because everything that makes up SPY looks too high. Apple's technically in the Dow Jones now, but as you can see, it moves with the SPY moves with it. They're reciprocal, and I think Apple is gonna pull back. It's done the same pattern that it did over here, where it gaps over support and then just sells off, and it's starting to do that again. 150 is the magic number, and until we break above it, retest it, and bounce, I am bearish on Apple again. So SPY, let's say get in 440 puts for September 17th, and we'll try to retest this 434 area. 436 probably is what's support. If you look here, you can see this has kind of been support. 1, 2, 3, it's bounced. So I'll assume it'll stop there, and then it can go lower, and then possibly go lower and then retest, and then we'll get in our 390 puts like I've always been saying, but or 390 target, I mean. But anyway, for this week, just for the end of the month, into September, I think we're going to go lower and retest this 50. So we'll make this our stop loss. Keep using the wrong tools. This candle will be our stop loss at 445. If it gets above 445, then get out of your puts. But as of right now, I think it's just going to retest this. This was too smooth of a pullback. The sellers didn't get out. They didn't get a chance to get out. You had some institutional selling when we gapped down, but the sellers, there was no struggle. People were too excited to buy calls and buy shares and to bring it back up, and I think it's just going to be another fake out. So we'll see. That's just my theory. SPY 440 puts off the open, target 436 for next week. Possibly break this and go lower for September. We'll look at that later though. So I'm short Apple, Nvidia, AMD, and then my favorite, Tesla, short. This is my idea, obviously. We are in a bear flag, or whatever you want to call this, but we're in a downtrend. We're still in a downtrend. And until we put in a higher high, we'll be in a downtrend. And you can day trade this with calls really good because they squeeze you out too. I was in 660 puts last week, and I was also in 700 calls last week because, again, we had another fake out here. So we gapped down overnight, sold off, came back up, and everybody that was short here is starting to get squeezed out, right? But then you got resistance, which was support, is now resistance, so this area is going to sell off. We popped again and sold off on Friday. I made a little bit of money at the beginning of the day, but I think once we break this area again, 774, 674, I know you wish it was 774. 674 is my trigger. Under 674 I'll get in puts, and we'll get in so Tesla is really crappy at theta decay, so you can't really swing Tesla unless you buy puts that are really far out of the money and expect to lose for the first few days. So the best thing is just to keep day trading this until it goes lower. But if you wanted to get 650 puts, 650 puts for September 3rd, I have written down here. If we gap up to 697 again, or in this area 694, I would buy puts off the open, and we'll ride it down to 650. Well, you can actually ride it lower than that. I expect to break this, come down to this support, and bounce. So 640 area. So you can try 660 or 650 puts for next Friday, and our stop will just be even 700, because once we break 700, actually, if you look right here, will be our stop loss at this double bottom right here, 697.85 ish. 698 will be our stop loss, because if we do get above that, then we are starting to put in a higher high, higher low. So Tesla short, Apple short, Nvidia short, AMD short, SPY short. The only one that I'm looking at long is Amazon, which is a gamble. But again, we can buy really far out of the money calls and hope that we're right. I have a feeling, if you look on the weekly, so we had this huge run up, and then it just stops right here. So I would assume that was where the market makers decided, okay, this is where we're going to start our pattern, right? Let me pull this back up for you. So I can't draw and do it at the same time. But anyway, so we're chopping around. We've got our mid price here, which on my chart is this line right here. So we've got our mid price, average price, whatever. We're chopping around. Then we start to expand, the expansion stage. So we're expanding. We bounced hard the first time here and got a really good run up. And then we came all the way back down. But I have a feeling we're going to bounce off this moving average and that line. So 3,200 is the bottom for the moment, and we'll bounce back up. And we can either put in an all new high and run just like Nvidia did. Nvidia was the same pattern. We had this big run. It stopped right here. That's where the market makers took over, and it consolidated, contraction stage, whatever. It started to expand, came down to this line again, and bounced hard. So my assumption is Amazon's going to do the same thing and put in a huge run for the next month or so, because they're going to announce a split, a 20-to-1 split or a 10-to-1 split, and everybody's going to want to buy Amazon again. So AMZ in long, 3,600 calls. Amazon 3,600 October calls, add over 3,600. Stop loss 31.26 is my stop loss on Amazon calls. I think we have again a double bottom, and everybody thinks it's about to break down. So, and there are enough shorts in the market right now that the market makers will push it up one more time before finally dumping it. Amazon long 3,600 for October. The other long is TLRY. This one is also a double bottom, and I've been watching this for a while because it had a gap up over earnings and broke a downtrend here, and then that has become support now. And so now I think when we get to this double bottom, I got in on Friday, but you want to get 1250 calls with a stop loss at 1250, because the bottom of this was like 1255, I think. Yeah, it's 1255. So 1250 calls for next Friday with the stop loss at 1250. If you're cheap, you can get 14 calls, I guess, and ride it to 14. And maybe we'll break this and get another retest of 15 or 1650. So, Tilray long. I think that was all of them. Oh, I got RAD. This one's been on my list a lot, but it finally looks like it's breaking out. Our only problem is we're running into the 50 moving average here, so we might just sell off, and if we do, then we don't get in. We only buy if it gaps over 16 and give it some change, so like 1610. If we gap over 1610, then it can run, and we'll get into 20 calls for September 17th. I think some of these smaller stocks are going to start popping again, while the larger stocks start selling off, and money will come back into these cheap ones. So RAD long, 20 calls for September 17th. Coles to me looks beautiful. We had this nice whatever you want to call it, flag resistance, and broke it, came back where it retested. Of course it was earnings, but where it retested was the top of this. So now I think it can go higher because it's consolidated enough, broke out, retested, and now it's going to just shoot for the moon. I assume on Monday it's going to gap over this resistance. The market makers will push it higher, and I mean, long-term target for us is $80. Short-term, we're in I think we're in 56 and 60 calls for next Friday, and our target's 64. So you can get in either, if you're cheap, get 60 calls and sell at 64, or either way, our stop loss has to be this candle right here at 55. If it breaks below 55, no matter what you're in, just get out. But over 58 or 50, yeah, 58, you can get in 60 calls if you're not already in this one. So yeah, I like Kohl's. So our longs are Tilray, Kohl's, and Rite Aid, RAD. The last one, 1, 2, 3, I'm in a bunch. 4, 5, 6, 7, 8, 9. Gold. GLD, we're already in, but I think it looks even better now. If I didn't already cover this, I've been talking so long I don't remember what I said. But anyway, breakout, retest, and then bounce down to this support area. So 165 puts on GLD. Stop loss 168. Pretty simple. Our target will be 160. So anyway, if you guys have any questions, shoot me a message. If you have any ideas, send them my way. I like doing this stuff. I do it way too much. So have a good week and good luck.